Hi everyone, I'm Dr. Soundararaj. I'm very happy to interact with you all through this video. In this video, I'm going to deliver a lecture on the topic Steps in Capital Budgeting Process. These are all a couple of details related to my career. After you watch the full video, if you find the video beneficial to you, give a like to the video and do subscribe my channel. Capital Budgeting Process. Capital budgeting is a complex process as it involves decisions to the investment of current funds for the benefits to be achieved in future, and the future is always uncertain. Obviously, capital budgeting involves in the process of investing the current funds, looking for the benefits of return in the future. But obviously, the future is also uncertain, and that has to be taken into account. A capital budgeting process may involve a number of steps depending upon the size of the concern, nature of projects, their numbers, complexities and diversities, etc. That is, capital budgeting decisions of a firm may have a pervasive influence on the entire spectrum of entrepreneurial activities. Hence, they require a complex combination and knowledge of various disciplines for their effective administration, such as economics, finance, mathematics, economic forecasting, projection techniques, and techniques of financial control, etc. In order to tie all these elements, a financial manager must keep in mind the three dimensions of capital budgeting program. They are policy, plan and program. These three P's constitute a sound capital budgeting program. So from these points we can very well understand that capital budgeting is a process by which a firm would like to invest its current funds looking for the benefits in the future. The future is uncertain. And not only that, to involve or to make use of the capital budgeting technique, the people in charge of utilizing the technique to assess the profitability of various investment alternatives should have knowledge over disciplines such as economics, finance, tax, mathematics, economic forecasting, and quite a lot. So in order to integrate all these elements or all these disciplines, the finance manager must keep in mind three dimensions which are shortly called as three P's in capital budgeting. They are nothing but policy, plan and program. Let us look into the 7 steps that have been suggested as steps involved in capital budgeting process. The first one is identification of investment proposals. Let's get into the detail of identification of investment proposals. Investment opportunities have to be identified or searched for because they don't occur automatically. The first step in capital budgeting process is the conception of a profit-making idea. They may originate from the levels of workers in the lower level management to the top level management. Most of the proposals in the nature of cost reduction or cost control or replacement or process for product improvement take place at the plant level or at the operational level. The proposal for adding new product may emanate from the marketing department or from the plant manager who thinks of a better way of utilizing idle or unutilized capacity. The departmental head analyzes the various proposals in the light of corporate strategies and submits suitable proposals to the capital expenditure planning committee in case of a large organization or to the officers concerned with the process of long-term investment decisions. A continuous flow of profitable capital expenditure proposals is itself an indication of a healthy and vital business concern. Although business may pursue many goals, survivals and profitability are two of the most important objectives for any business concern. So obviously, the very first step in the process of capital budgeting is to identify suitable and feasible investment proposals which will guarantee the profitability of the concern in the days to come. Most of such capital investment proposals in the nature of cost control and reduction of cost or replacement of an existing plant or machinery are process for product improvement that come basically from the workers at the operational level, whereas new product ideas originate from the marketing department. So that is what suggested in point number 1. Point number 2, which is a second step in the capital budgeting process, is screening the proposals. Obviously, each proposal is then subjected to a preliminary screening process in order to assess whether it is technically feasible, resources required are available, and the expected returns are adequate to compensate for the risk involved. This is a very important stage. Once the investment proposals are identified at various levels of the organization, definitely those proposals are to be assessed through the screening process, in which the committee in charge, the officials in charge, will assess whether the particular proposal from the list of proposals is technically feasible. Do we have the financial resources required to convert the ideas into actual project? And in addition to that, the expected returns, whether they are adequate to compensate the risk the business undergoes, and so on. All care must be taken in selecting a criterion to judge the desirability of the projects. To screen the proposals, the capital investment proposals, every concern should decide about a criteria. The criteria should be a true measure of investment projects' profitability, and as far as possible, it must be consistent with the firm's objective of maximizing its market value. And moreover, such criteria should encompass the supply and cost of capital and the expected returns from alternative investment opportunities. The third step in capital budgeting process is evaluation of various proposals. If a proposal satisfies the screening process, it is then analyzed in more detail by gathering technical, economic and other related information. Projects are also classified, for example, new products projects, or expansion projects, or improvement projects, and they are ranked within each of their classification with respect to their profitability, risk and degree of urgency. The various investment proposals may be classified as mutually exclusive proposal, independent proposal and contingent or dependent proposals. What is the meaning of mutually exclusive proposal? Mutually exclusive proposals serve the same purpose and compete with each other in a way that the acceptance of one precludes the acceptance of other or others. Some technique has to be used for selecting the better or the best one. Once this is done, the other alternatives in the category are summarily rejected or eliminated. Regarding independent proposals, these proposals are those which do not compete with one another, and the same may either be accepted or rejected on the basis of the minimum return on investment required by the business. For instance, when there are two proposals, a firm can undertake both of the proposals if both seem to be profitable. And the third category of proposals is contingent or dependent proposals. These are all the proposals whose acceptance depends upon the acceptance of one or more other related proposals. For example, if a firm decides to build a factory in a particular area, it may have to invest in houses, hospitals, roads, etc. for the staff. Thus, building a factory also requires investments in these facilities for the employees. The total investment will be treated as the single investment. Therefore, investment on the facilities of the employees will also be a matter of concern when a business wants to construct a factory which are connected to the facilities to be offered to the employees as well. The fourth step in the capital budgeting process is establishing priorities. After evaluation of various proposals, the unprofitable or uneconomic proposals are summarily rejected. The accepted proposals, which are said to be profitable proposals, are put in priority. It may not be possible for a firm to invest immediately in all acceptable or profitable proposals. Thus, it is essential to rank the various proposals and to establish priorities after considering urgency, risk, profitability, and the objective of the concern. The fifth step to be considered in capital budgeting process is final approval. Proposals finally recommended by the committee are sent to the top management along with a detailed report, both of capital expenditures and of sources of capital. Financial manager will present several alternative capital expenditure budgets. When capital expenditure proposals are finally selected, funds are allocated for them. Projects are then sent to the budget committee for incorporating the details of the project in the capital budget. And the sixth step in capital budgeting process is implementing proposals. Preparation of a capital expenditure budgeting and incorporation of a particular proposal in the budget does not itself authorize to go ahead with the implementation of the project. A request for authority to spend the amount should further be made to the capital expenditure committee, which may like to review the profitability of the project in the changing circumstances. Further, while implementing the project, it is better to assign responsibilities for completing the project within the given time frame, and also the cost limit which has been prescribed in order to avoid unnecessary delays and cost overruns through the project. The seventh point of consideration here as step in capital budgeting process is performance review. Through this step, an evaluation of performance of the project after it has been fully implemented is done. It is the duty of the top management or executive committee to ensure that the funds are spent in accordance with the plan. And moreover, a control over such capital expenditure is very much essential, and for that purpose a monthly review report showing the amount allocated, amount spent, amount approved but not spent should all be prepared and submitted to the controller. The evaluation is made through post-completion audit by way of comparison of actual expenditure on the project with the amount which was approved to be spent on the project. And it also facilitates comparing the actual return from the investment with the anticipated or the budgeted return of the project. If there are unfavorable variances, they should be looked into and the causes of the same variances should be identified and corrective actions may be taken in the future. So this is what about the steps involved in capital budgeting process. I hope you have enjoyed the video. If you find the video useful to you, give a like to the video. Thanks for watching this video. Bye for now.